Welcome to the channel. Ever wonder how big corporations rake in billions? The answer isn't just about selling products or services. It's about the clever finance tactics they use to grow their wealth, minimize taxes, and maximize profits. Today, we're pulling back the curtain on some of the most powerful finance strategies that help the world's biggest companies stay ahead of the game. Let's start with one of the most common but often overlooked strategies: tax avoidance. Now, don't confuse this with tax evasion. That's illegal. But tax avoidance, it's completely legal. And the biggest corporations know how to use it to their advantage. By using loopholes, subsidiaries, and offshore accounts, companies can dramatically lower their tax bills. This allows them to keep more of their profits and reinvest it into their business, fueling further growth. For example, companies like Apple and Google have been known to funnel profits through subsidiaries in low-tax jurisdictions, countries with minimal corporate taxes, so they pay less on their global earnings. While small businesses might not have these same opportunities, these tactics are common among the corporate giants. Next, let's talk about leverage. In the world of finance, leverage means borrowing money to invest in something that will make you more money. Big corporations take this to the extreme. By borrowing funds at a low interest rate, they can use that money to expand operations, buy back shares, or acquire other businesses, all while keeping their own capital intact. Take Amazon, for example. The company has used debt to fund its massive infrastructure, including warehouses and distribution networks. By leveraging debt, Amazon has been able to grow at an astonishing rate, without needing to rely solely on profits. And here's the kicker. Because the interest payments on their debt are tax deductible, they're able to further reduce their overall tax liability. Then there's the economies of scale, a tactic that allows large companies to cut costs as they expand. The bigger a company gets, the more they can produce, and the less it costs them to make each unit. Think about companies like Walmart or McDonald's. They've mastered economies of scale by negotiating lower prices with suppliers, reducing per unit costs, and using their massive buying power to drive down production costs. And it doesn't stop there. Corporations also use strategic pricing. By pricing their products just right, often slightly higher than their competitors, they can maximize profits without scaring customers away. For example, Apple has built its empire by positioning its products as premium items. They charge higher prices for their phones, laptops, and accessories. And consumers keep coming back for more because of the brand's perceived value. Another tactic used by big corporations is customer data utilization. In today's world, data is power, and companies are gathering massive amounts of it. By collecting data on their customers' shopping habits, preferences, and behaviors, these companies can predict trends, tailor marketing strategies, and even adjust prices dynamically to maximize profits. The more data they have, the better they can serve up exactly what their customers want, and at the right price. Take Amazon once again. They track everything from what you browse, to what you buy, and even what you leave in your shopping cart. With this data, they're able to predict what you're most likely to purchase next, and make personalized recommendations. This isn't just for convenience. It's designed to increase sales and boost revenue. Finally, let's talk about stock buybacks. This is a powerful move that big companies use to boost their stock prices. Essentially, a company buys back its own shares, reducing the number of shares on the market. This makes each share worth more, which can drive up the stock price and benefit shareholders, especially executives who often own large amounts of company stock. Companies like Microsoft and Tesla have used stock buybacks to maintain high stock prices and reward investors. But while this can benefit shareholders in the short term, Critics argue that it takes money away from more productive investments, like research and development, or employee compensation. So, how do big corporations make billions? Through a combination of tax avoidance, leverage, economies of scale, strategic pricing, data utilization, and stock buybacks. These tactics are the backbone of corporate financial strategies. And while they might seem complicated, they're actually key to their ongoing success and massive profits. While these strategies help big corporations thrive, they're not always accessible to small investors or businesses. But understanding how the giants do it can give you valuable insights into how to grow your wealth and make smarter financial moves. Want to get in on the action? Start by learning the basics of investing, leveraging resources wisely, and thinking long-term.